Hey, what is going on YouTube? This is Tom here with another episode of Market Cap Investing. Again, where we're showing the power of long-term compounding growth with fractional shares of just $5 per week. And we're keeping in mind our rules. Slow and steady wins the race. We're ignoring share price and focus on market cap. And we're making macro trends work for us. Some of those macro trends include things like online shopping, clean energy, streaming video, legalized sports gambling, the war on cash, etc. Today we're going to talk a little bit more about streaming video. We'll take a look at where we are here, week 48. This is actually for last week. I did not post a video last week. I was on vacation last week, and I was providing a lot of money to support the stock we're going to buy today. Today we're going to buy Disney. I was down in Orlando and Walt Disney World, and showing that no matter how old your kids are or even how old you are, how much fun you can have and how much Disney has as far as pricing power and how expensive things are down there. But we still fork over the cash for the enjoyment and the experience. So rough couple of weeks here coming up to last week. This is where we were. I'll be posting a second video later today for this week, but this is to make us up for last week. Let's take a quick look at Disney over here on Yahoo Finance. This usually reloads on me, but Disney's an interesting stock because it's kind of at an inflection point. You can see that the sales were growing back in 2018 and 2019, and then we hit 2020 pandemic, and for the last couple of years, it's been sort of at this inflection. It's making money on online and streaming video content with Disney Plus, and it's losing money or not making the money it used to make on parks and all of the theme parks and movies and theaters. At some point here in the next 6 months to a year, it's going to start to flip back around towards still making money in streaming, and it's going to start making all that money again in parks. I can tell you the parks were really crowded. Lots of people having lots of fun, spending lots of money. And if you look at the quarterly and annual revenue growth, it's going in the right direction. It's what we like to see. It's a company we want to own for the next 10 years. They've got all the power in the world as far as pricing power goes. So I'm going to go ahead and click over here to our Fidelity account, $5 a week. I'm going to find Disney, which we already owned some of. Looks like we had a cost basis of $143 a share. It's still, the market cap of Disney is, I'll go back to that in just a second, but the market cap of Disney hasn't changed a lot in the last year since we first bought it. Let me flip over here and show you where Disney is. It's a $313-ish million company, a billion-dollar company, between $300 billion and $350 billion. And when you compare that to Amazon, when you compare that to Google, when you compare that to some of these other technology stocks, Disney really has a lot of room to double and triple and quadruple as it really moves into more of that technology space and continues to capitalize on all of its investments and everything that it has. So anyway, thanks for watching. We're going to buy Disney right now. You can watch me do that. I'll run through the stocks that we own in just a second, and then I'll be making another video here in a couple hours with the next stock of the week for this week. I'll also update the sheet to show how we're doing, because we're doing a lot better this week than we were last week, just because the markets have been turbulent the last couple of weeks. So there we go, $5 worth of Disney.